Hey, Terrence, how you doing today? Top of the day to you.
Top of the day, back to you, Dark. Missed both you and Puncher yesterday.
Yeah, I've been busy.
Yeah,
Super busy. Let me bring Punch back up.
it seems like it. Yeah, he keeps having trouble for some reason.
Yeah,
I
we got to get him a Starlink. He's got to participate in the SpaceX craze.
is that the issue? Is he out running around?
He's got a big enough head that we can mount a Starlink Mini right on top of him, and then he won't have any problems.
I thought he was in Scottsdale, he's next to all those malls, so I thought he'd have perfect reception over there.
You guys talking about me?
Oh,
no, no, not at all, sir. See,
well,
Terrence, you got me in trouble again.
I know. Well, let's say hello to everybody, and then we can get into it. Lots of good stuff to talk about. What's been new with you, first of all, Dark, or what have you been paying attention to? Because I haven't heard your voice in a few days.
Yeah, I think I'm turning Japanese. I really think so. Japan, Japan, SpaceX. Um, those have been my focuses of just trying to figure out what the hell is going on in peak fiat. And yeah, I really want to talk about Japan because that's getting crazy.
Yeah, beautiful. Puncher, how about you? How's it going? Are you recovering? I know there was some drama a few days ago, which we don't have to talk about, and I prefer not to talk about, but
Oh no,
uh,
I don't
I'm
give
still
a,
getting caught up. Yeah.
I don't give a rat's ass about that.
Yeah, I didn't think
I
you
will,
did. You did.
I will not stop talking about that. But not here.
Yeah,
Um,
absolutely.
no, I was sick yesterday. I was trying to get to a board of directors meeting up in Casper, Wyoming. Apparently, projectile vomiting while you're in line to get into the airplane is frowned upon, so they wouldn't let me board. So I went home and recovering today. Sorry for the details.
That's okay. I was projectile vomiting last time I saw you in Scottsdale and barely made it home, but
Oh, I didn't know that. You covered it up good.
it was that breakfast place the Vardy girls took me to. Yeah, I don't. It was a good place, but I don't know what I ate. But anyway, um, okay, yeah, we'll get into it. Thomas, how's it going? And then let's say hello to Anon. Oh, good to hear from you, Thomas. Great. Hey, Anon, how are you doing?
I'm doing good. I've got to say, I've come to the conclusion that the bear market is a healthy phenomenon, and we maybe need it a little more often to shake out some of the grift.
Yeah, absolutely. I feel every time in hindsight, it's so healthy. It's obviously not fun to go through, depending on when you came in, but because I think about this whole class of people that came into this space, and I know they came in just within the last 2 years or less, and they watched us go all the way to that little pico top of 125, 126, and then now they're feeling the bear. But we all did that, and oddly, I think a lot of people, or it seems like a lot of people, like there's a lot of noise of when they come in, including myself, where it's like 2 of 3 months of euphoria and then kaboom, and it's like, okay, reality sets in. Let me find out what I really have and if I'm here for the right reasons. And a lot of people that wear suits or otherwise just aren't here for the right reasons, and we're just a trade, as we're seeing at the moment with the whole AI thing. But I don't think that's necessarily going to last, and they're going to want to park some of those profits somewhere.
Hey Terrence,
Yeah,
I spy Matt, parenthetical Matt in the
Oh my
audience.
gosh, let's invite him up here. What the
I
hell?
did. Matt,
Wow,
come on up, man. We haven't heard from you in a hot minute.
the
Sorry,
third
Amen. Go ahead.
the third Winklevoss twin. Okay, yeah.
no, all good. I actually had a question for you, Dark. I was watching an interesting video. He's from a guy who's a Bitcoiner. I'll try to find it and post it, but he's thinking that the Federal Reserve and the Treasury are going to relax regulations that allow banks to buy more than the limited amount of treasuries they're currently allowed to have on their balance sheet. So that will create new buyers for treasuries. And instead of basically lowering rates, it'll effectively have the same effect. I'm curious what you think about that.
But let's get to the heart of the matter, right? Which is why would they buy treasuries? There's 12, the US government needs to refinance $12 trillion in treasuries. All of the money held in US bank accounts and money markets and everything else only amounts to $20 trillion worth of treasuries. The Japanese are stuck into some kind of circular firing squad where they need to sell treasuries to defend their currency, which is falling again. They blew through 75 to $100 billion in the last 6 weeks trying to defend their currency, and it's failing. So you've got a lot of cross currents. It's not as easy as just, oh, go ahead, banks, buy our treasuries. And maybe they will, right? Maybe the system's so rigged. This is what peak fiat looks like, right? People aren't acting out of their best economic interest, right? They're acting in a way to preserve the system. So, that's not free market capitalism. That's something else. I don't think it's communism. I think it's peak fiat. I don't know how else to describe it other than, you're trying to force that square peg through the round hole. And at some point, it just won't fit, right? Like, no matter how hard you pound.
Yeah, no arguments there.
Why does it have to be banks buying them?
It doesn't have to be. That's just this guy's theory. I was just curious what Dark thought about it.
Well, no, they're going to do everything in their power to try to drive capital to the US Treasury market, which they have to. It's not even an if, right? Like that's a must. The real question is why would you buy them? And ultimately, the only reason to buy them is if the Federal Reserve is guaranteeing you won't lose money. So I think the Fed needs to step in and buy them.
Or if it's a way to get access to the financial system within the United States as they build a new walled garden by changing how the monetary system works
Yeah,
through
well,
the implementation of stablecoins. And I'm even more convinced. Also, how's it going, guys? It's been a while.
yeah, it's been a
It's been
Um,
like
minute.
6 months or something. Jeez.
Yeah, once a year, Groundhog Day, came out of my hole to announce that the bull market's about to start. Just FYI. So, that's my contribution, and then I'll leave for another 6 months and give you guys an update afterwards. But
It's supposed
anyways,
to be 6 weeks, not 6 months.
sorry, I got that one wrong last time. That's my bad. That's probably why prices have been so suppressed for so long. But it's all good. We're reversing now, so just FYI. But no, I just wanted to say on the stablecoin thing or the treasuries thing, to me, I just see them basically sucking liquidity out of the Eurodollar system and pulling it into basically the Treasury's purview. And I think they're kind of forcing a lot of that Eurodollar money that right now you could argue is not really under control of the Fed or the Treasury because it's outside of that system. It's not directly tied to it in any way. And they're going to try to force it back in and create immense amounts of demand for short-term T-bills. And that's going to be one of the primary ways that you kind of get a reorientation of what's happening in global markets towards the actual United States as a sovereign. And I think that in the short to medium term, you basically have a pretty easy solution for the balance sheet issues that the United States faces by letting the asset side grow, and basically trying to keep keep it from manifesting in a way that's detrimental to people on the ground, which is what actually gets people upset, which is your COVID style inflation, right? Where you have just your basic necessities going up in price. If they let things like gold, Bitcoin, that kind of stuff tied directly to the US balance sheet through treasury market, I think like what you've talked about for a while, Dark Side, right? Having some sort of Bitcoin kicker and or even gold tied to US treasuries in some way. There's an incentive there that you're going to always have people that are seeing that as a guarantee no matter what. They see treasuries as safe, and I don't think you're going to change that anytime soon. I think they're just trying to reorient everything back there and try to effectively grow or inflate their way out of it versus, the bigger risk, which would be the deflationary option, which is obviously a lot more destructive. Not that inflation is good, but anyways,
But
I don't
Matt,
know.
but
I think
Matt,
that's
Dark,
what they're trying to do. I'm not saying it's going to work, but it's clear that that's the direction that Scott Bessent wants to take things.
yeah, I agree. But Dark, you said the Treasury guarantees that they don't lose money. Are you talking about real money? I mean, anything they do, um, the debasement gets larger, right? If they raise rates, the debasement ultimately gets larger. If they reduce rates, same thing. And how can they guarantee that they don't lose money in real terms by owning treasuries? I don't unless you have this massive deflationary event, which Matt just said would be completely destructive. I,
They
I,
don't
I
guarantee it
mean,
though. All they care about is nominal, and that's all that matters because they're never going to say, "Hey, in purchasing power terms, we're going to maintain
Yeah.
you."
right. So
Right?
that's the rub, right? People don't realize that even though they think they're making 4%, they're really losing 3 to 6%.
See, I think the front end's going to come down to the ones and the 1-2% range, and I think it has to. Now we can argue whether that'd be inflationary or not, but ultimately you've got to get your debt expense under control. So I
Well, then
think,
who's the buyer? The buyer is who?
well,
Treasury
Fed.
or it's
no
stable
people,
coins. It's they're
well,
going to try to push it to be stable coins. That's the only possible way to make it work.
or the Fed. The Fed just increases its balance sheet and puts a de facto bid under bonds, and
Yeah,
then people storm into bonds because they know they're going to get, not just the interest rate but the capital gains as well as bonds go up in price and down in yield, right?
I
That's,
don't think the new regime in the Fed with Warsh is going to want to do that. I think
well, I
they're going
know
to
he
try
doesn't
to.
want, Lou, nobody wants to do it. It's just a matter of what they have to do, right? Like I'm not sure there's another choice. Look, I
Right,
think
but
I want to go back to Japan because I think you guys are missing the real story here, which is Japan had raised their rates today and their currency went down. Okay. Those two things should not happen. The higher your rate goes, the more attractive that rate is to the buyer, and therefore money should flow into your currency. They've spent $100 billion over the last 6 weeks intervening to try to protect their currency, and they failed. Okay. At the same time, their bond rates are going up, their currency is going down. Those two things shouldn't happen together. And the reason why it's happening is because they own their bonds. They have bought so many of their own bonds. They own over 50% of their own bond market that when they raise rates, they're raising them on themselves. They're basically pushing unrealized losses onto the Bank of Japan. And that this whole thing can unwind, right? Like this is scary territory for the Japanese. And just to be clear why they're intervening in their currency, if their currency is to continue to weaken, okay, that makes the foreign goods even more expensive. And because they import so much, all of their energy, most of their food, that forces inflation into their system, which means that they have to raise rates by traditional concepts, right? So you can see a doom loop beginning to form over in Japan.
can you make the argument that one of the reasons you see demand lowering on their currency or their currency actually going down when they raise rates is because of what it's also used for, which is the yen carry trade? Like it basically makes that a non-functional thing anymore as they continue to raise rates. Like you can't use that to then prop up the entire once again, like Eurodollar system investment trade that people were doing with the yen carry trade, it basically shuts that off, which weirdly lowers demand for the currency because it was being used for something outside of arguably the benefit for Japan. So you kind of, if you wanted to even attempt normalizing that, you have to raise rates to shut off that mechanism and accept the fact that there's going to be some pain and try to manage your way through it in a way that hopefully doesn't lead to a complete collapse of the currency, right?
Well, that's it, right? Like that's the doom loop is the complete collapse of the currency, which is now again, who knows? Fiat system is about pulling levers and coming up with new acronyms, and it's every in the entire Western banking system's interest to save Japan. But Japan is in real trouble right now, and that's because they fucked with the system for the better part of 25 years, and now the system's coming back to get them. So the question is, can they do that? I don't know the answer.
Do you think it's
So do you guys
Japan
see?
as a sovereign that's in trouble, or the people that were using the yen to do what they were doing for the last 25 years that are more in trouble? Because I think
No,
the two things could be completely separate.
yeah, I think two things can be true, and the answer could be, well, the yen carry trade unwinds. You're not getting hurt on that because the currency is so weak, assuming your hedges weren't too big. But the real damage comes to the Japanese people, right? When they go into an inflationary spiral, and how do you get out of it? When you import all your goods and your currency is continuing to fall, right? Prices just keep going higher, which leads to higher rates, which leads to higher prices, which leads to more debt, right? Like you just get into a spiral.
In
Do you guys
in
see
yen
that?
terms, I don't disagree with you. I do think it's interesting though if you look at like their current administration and ours and kind of the way they're realigning themselves, it wouldn't be surprising to me to see them try to do some level of dollarization through once again stable coins. I just think that like I'm not saying that this is like good or I agree with it. I'm just saying I think this is what's happening. I think you could see them as well as probably places like Venezuela, Argentina that are in the US's orbit in the short to medium term, I'm talking 5 to 20 years, basically, just start to dollarize, kind of like you saw El Salvador do, right? And I do think ultimately this is good for Bitcoin, but I think there's like this weird intermediary step where you go from true fiat to stables, which aren't, they're not fiat in the same way. Because there's at least some, I don't know, it's not, I'm not going to call it backing because it's not backed, right? But there is at least a treasury tied directly to the actual tether and circulation versus the Eurodollar system, which is just truly a floating fiat print money out of thin air system. Not that there's a whole lot of difference there, but I do think the mechanisms matter. Anyways, with Japan specifically, I think there's a potential that as that yen carry trade kind of unwinds, they try to normalize interest rates, they push people out of their system that were using it for nefarious purposes, or maybe not nefarious, but at least self benefit at the expense of the nation of Japan. I feel like a lot of damage has already been done there. I mean, their stock market, for example, basically flatlined for 25 years. You could argue that a lot of the damage has already been done with birth rates collapsing. They've had massive inflation there already. It's completely unaffordable for people to live. Like I think there's an argument to be made that most of the damage has actually already been done slowly over time. And as they normalize things, there's really not a whole lot more damage that could be done. There's a potential for them to do deals with the United States where they just use access to our oil markets in Alaska, which they want to develop, that could potentially keep their imports from being too crazy expensive. So I don't know. I feel like there is a pathway that you could have that unwind that doesn't necessarily have to be catastrophic, but it's not going to be painless either, right?
I still, Matt, I'm with you. I know the mechanisms of a stable coin are different, but at the end of the day, it's tied to a treasury that's 40 trillion and climbing in debt that's supposedly backed by a U.S. military that keeps getting its ass kicked. So
What do you mean getting
I'm
its
not
ass
sure.
kicked? I mean, I'm curious about that.
Okay, well, I mean, we we're doing a deal in Iran that was supposed to take weeks. that really, I could say you can make a case that Iran won this thing. I mean,
I definitely
they're saying
disagree
that
there.
the Straits of Hormuz is open. Well, the Straits of Hormuz wasn't closed prior to us going in there, and I don't think, from what I'm hearing, we're not getting access to their uranium, and we're paying them back 300 billion. And like, what was accomplished?
Well, the
And
deal hasn't been
then I'll
announced
point
yet,
to
has it?
Afghanistan. Then I'll point to Ukraine, where we're essentially fighting a proxy war against Russia that we're losing. I mean, I don't know. I was in the military for 25 years. I understand it quite well, and I fought in a lot of those wars. That guess, I mean, would you say Iraq was a win? Would you say Afghanistan was a win? Would you say Iran was a win?
So I think some of the earlier ones are different. It, versus the current Iran conflict. I think saying that we lost it is a bit of a stretch for me personally. I think if you look at what I think the goals of it actually were, I definitely don't view it as a loss, and I definitely don't think on the Straits side of things that you can make the argument like, yes, sure, it wasn't closed before, but you also have to look at, well, who was controlling what was going through versus how it's reoriented things. And I think I'm trying to look at things from a sovereigntist lens here, right? Because you have to put yourself in the shoes of the decision makers within the administration, and that can be difficult to do from a Bitcoiner's perspective sometimes, because obviously we would prefer things to be more of just, hey, market decisions are what ends up getting made. You get gradual efficiencies over time. Unfortunately, that's not the world we live in. We live in a world of sovereigns that are vying for power and control over things, and that's just the reality. So I think if you look at it from a standpoint of, did the quote US win, I think they basically gained a larger share of the global oil market. Venezuela was obviously a success from that standpoint, right? They're increasing the amount of barrels that are shipped. China's no longer doing stuff there anymore. We have more access to it than we did before. And I think with Iran, you have to look at it similarly. Um, Before the conflict, yes, oil was flowing through the straits, but I think even during the conflict, a lot of oil was flowing through the straits because the oil market itself kind of indicated that, right? We never saw the crazy price increases. Yeah, it went to 120 a barrel, but it's already back down to 80. If the straits were
We
truly
also
closed,
depleted our strategic reserves. So did China.
yeah, but you also had barrels getting through the straits themselves. You had ships turning transponders off, moving through. It's clear to me that there was not a large enough oil market dislocation relative to the narrative around it being fully closed and those assets potentially even being destroyed. I think if that had happened, the amount of barrels reduction would have led to larger increases in energy prices. And this is kind of the world that I live and play in, right? So
Well, what about? Look, I let's call it a tie. All right, let's call it a tie.
sure.
We'll see, right? We'll see. We're what, less than 24 hours into this supposed deal. But
Right, and I don't
the
think
Europe,
have the correct me if I'm wrong here, but the full details of the deal haven't actually been released by the administration. There's been a bunch of different reporting on what it is.
well, that's because there's different factions inside of Iran, and it's hard to know who you're dealing with and who's going to emerge. Is it the IRGC? Is it the more moderate? Is it the really hardliners? It's hard to know who you're talking to and who's going to emerge as the authority in Iran, which makes the entire deal very difficult. But beside that, the whole petrodollar system is kind of premised on a couple things that we, the barrels of oil are denominated in dollars, and for that we provide security for the GCC coalition. Well, we couldn't do it. They got really wrecked, and it was pretty obvious that once we were sent enough $2 million missiles to take out a $10,000 missile, that at some point we ran out. We rely on China to rebuild because we can't do it, and like that whole facade of "we will protect you" kind of got smashed a little bit. So I don't know. We're
But
going to find out what the repercussions of all of this were, but I don't. I think it's
well,
really
but
early to
that's
tell.
also
It,
operating from a framing that assumes that we're trying to actually help some of those other entities, and I think that a lot of these things are being rewritten or reorganized in real time. For example, I don't think the administration right now sees Europe as an ally in any way. I think they want them to be, but they're not behaving as such. And so I don't think
Well, I
we're
agree with that. Yeah.
I don't think we're doing anything that could potentially benefit Europe. And I think I view the Ukrainian conflict through that lens as well, right? Like, I don't think we're it definitely since the current administration has come into power. I don't think we're doing anything to try to help the Ukrainian side aside from maybe holding up some deals that were already made prior to them coming into power, maybe saying, hey, we'll honor those, but moving forward, we're really not going to do anything. And Trump himself even came out and said recently, within the last week, with this whole Iran deal, that Russia and China helped broker the deal. So to me, it seems much more like we're reorienting things to try to start working with them at the expense of Europe, and then with the attempt, at least, or the intent is to stabilize the Middle East and get out of there. I think their goal is to actually leave, and if that could be accomplished, which the jury is still out on, I'm not saying it's going to happen, but if 6 months from now we come back and we're largely decommissioning our assets in the Middle East and moving out of there, the Abraham Accords are actually in effect, and Iran is brought into more, let's say, less of a sanctioned regime, then to me, I would call the conflict a success because we really didn't lose much from a military asset standpoint except for missiles, and those are expendable anyways. So I don't know. I feel like calling it a
Yeah,
loss
but they got to be
is
replenished.
yeah,
They got to be
exactly. They can be
replenished.
replenished.
And that's going to take a long time
I
because
don't think I
at
don't
the
think
end of the
so
day,
because this is what
well,
I've
we're
been working
dependent
on for
upon
the last.
China.
Sorry, go
We're
ahead.
dependent upon China for much of that. Well, look, I just say we got some hands we'll go to, but and I appreciate your stance. We don't, it's too early to tell. But I
Agreed.
will say
Agreed.
that I think a lot of this was because we're 4 months from midterm elections, and Trump needed a narrative at least. So I think he got it. Okay, we got a deal, whatever. But the repercussions of that deal and the reality of that deal are
Well, and I
TBD.
think it's hard to judge the deal until the deal is actually fully revealed. So my judgment is still, the jury's still out on that one at least, right? Because we don't actually know what the deal is. There's a bunch of reporting about various things, and then you already see the narrative crafting happening on both sides, where you're seeing Trump's enemies basically say, hey, this deal is terrible, like nothing was gained, all we did was lose and spend a bunch of money. Like, that's clearly narrative craft against him. And then you have on the opposite side your let's call it American regime talking heads that are saying the exact opposite. Hey, we got everything we wanted, nothing was lost. Yet neither side has actually released a, to me, verifiable copy of the deal. So a lot of people are just kind of confirming their biases on either side. Is kind of how I'm viewing it right now. But anyways,
I
there's
agree.
another hand.
Let's
So
go to Anon and then Thomas. Thanks, Matt.
Yeah, Matt, this is actually for you. So PPI came in year over year at around 6.5, and that's probably mostly attributed to the Hormuz stuff. I have a hard time thinking that Warsh is going to come in and print directly into that or lower rates into that. I'm thinking he'll probably hold steady and give some sort of forward guidance, making gestures at a future cut maybe. And then they might have to get creative and rename things and call things transitive or whatever. What's your take on that?
fully agree. I think Warsh has already positioned himself in the past as being relatively hawkish. I don't see him wanting to lower rates at all or following through with it. And I think you'd have to see pretty bad economic numbers or jobs numbers along with really low inflation for him to even consider lowering rates. Otherwise, I think they're just going to keep holding them.
Thomas.
Yeah, so with this war in Iran, I mean, at best you can say we didn't win. We may not have lost, but I don't think we won anything because you know we're kind of getting back to the way things were before the war started. So we're not getting a new condition here.
Well,
You
if you
know,
get regime
there was
change
20.
in Iran, that would be a new condition. If hypothetically the IRGC is no longer in charge and you have a more moderate, less religious fundamentalist regime in Iran, a quote civilian government, then you could say
Yeah,
that's a change. I'm
maybe.
not saying that's in place yet, or that it is, but if that ends up being the case, then you could say there was a state change there, right? So it's an if-then statement.
I'd say that's I would give you that, but that's jury's still out on that. But I would say from the economic side, 20 million barrels are going through. Uh, Global demand is like just over 100. So let's just round it off to 20%. So 20% of the oil was going through the Gulf. Uh, a lot of mitigation was done. Maybe a handful of boats turned off their transponders and got through, or they used the pipeline, and but mostly there was a lot of the ways that the price was ameliorated and from going way to the moon was the coordinated strategic release through the IEA of strategic reserves. The U.S., China, everybody did it, and but that's a temporal. That doesn't. You can't do that forever, and there's a point at which you can't do it, and duration is the real risk here. So right now, there's if you just pull up the marine traffic, nothing's flowing there, according to people are saying, well, they're clearing the mines right now, and we're going to go back. But you got insurance issues and things like that. But I would say, at the end of the day, as best I can tell from reading through everything, let's just call it 10 to 12 million barrels have have come off the market from where it was in February. And again, that was mitigated through some demand destruction and the use of reserves. I just don't think that can last long. And if this peace doesn't hold, then I think you really run the risk of things popping back up. And I think I don't see Israel as a good actor here. They don't want to see this deal cut as it's currently being reported. So I just expect them to behave poorly, and that could queer the deal out. So I hope we have the peace. I hope it works out. I wonder whether we really it was worth what we went in there for to accomplish. Um, minimal benefits, if any. But I do think you should consider the fact that there is a possibility that this thing comes off the rails a little bit, and we're back to some level of conflict that creates problems. The GCC countries got hit, and there's permanent damage that needs to be rebuilt. People forget that it's not just oil going through the Gulf; it's the other distillates. It's natural gas, helium's coming out of there, and some of the other distillates are coming out of the Gulf, and they're critical to Southeast Asia. So, like, we already missed the fertilizer window for the spring in the northern hemisphere. If you could afford the fertilizer and get it, great, you used it. But a lot of farmers either didn't plant or they didn't fertilize, and so you're going to see that manifest in food prices. It'll be annoying for the United States. It'll be really bad for Southeast Asia and some parts of the world where they may have some level of food insecurity. So I don't think this is done playing out. I know the administration would love to say, mission accomplished. Let's move on to the next thing. But I just don't think I just don't think that's realistic. And you know, you have to reconcile that 10 million, 12 million barrels that are not online right now, and you can't point to the use of reserves as a permanent solution. That's not a permanent solution. And then the last point I'd make is, once things do stabilize, and I hope they do, the reserves have to be replenished. So if you're Japan or China, you're just going to buy the shit out of oil to get it back to 100% reserve capacity. That's what I would do. And to me, that's going to put buy pressure on global oil for the time being, probably the next few quarters, next year or so.
Yeah, but before you do that, you're going to pound the living daylights out of futures and jam the price down to the 50s, and then you're going to load up there.
I
Um,
think,
you know,
and just to clarify, Thomas, I'm not necessarily saying I agree with any of the arguments I'm making. I'm just trying to kind of play devil's advocate and throw possibilities out there that I think need to be seriously considered, because I do think there have been a lot of people that have been, let's just call it, catastrophizing what's been going on. And I think the markets have clearly been indicative that it's not as big of a catastrophe as people are making it out to be. Not saying that your points are invalid, that sure, things can always get worse, things could derail, the deal could fall through, yada, yada. But
So Matt, so let's play
right.
that out a little bit. There was a lot of people saying $200 oil, and they were going through microeconomic math, which says if this happens, then the price goes up. The problem is I never saw $200 happening ever, because at some point, and the number, and I'm going to make up a number because I don't really know, $140 a barrel, you start getting serious demand destruction. People stop driving.
Absolutely.
So the demand destruction brings the price down. So there's a self-correcting factor. The problem with demand destruction is it leads to global recession. Energy is probably one of the most key ingredients to the modern economy. If you were to have prices go to 130 sustained, 140, 150, you get into serious demand destruction that leads to global recession. So $200 is only a whiteboard exercise. I don't think it could politically ever happen, unless it was absolute catastrophe. Which, in case, we're still back to the recession issue. So I I I, I see there's probably, as Dark pointed out, there's a disconnect between paper and physical markets. It's true in oil. It's true in many things.
Well, and you
And I
actually
think,
see that between Brent and WTI, right? Like the prices have dislocated between the two of those more so during this conflict than they have in the last 10 to 20 years, at least from what I could find on any chart. So I think that's really interesting, because WTI is basically your ability to actually deliver a barrel versus Brent being just a strictly like cash settled futures market. And so it's clear there's been, to me, it looks almost like an attempt by that market to make the prices go even higher than they did. Perhaps it's people playing the game trying to make money on it. I don't really know. I don't have a feel for the why, but I do find it to be interesting that, those prices dislocated the largest that I could find during this conflict. And to me, that's the signal of something going on there. And I think it's kind of indicating that the ability to actually deliver the oil is what matters a lot more than the price of it now. And
yeah,
I
also remember, we tend to, at least in the media and the major discussion, they want to simplify things down to the price of oil is X. Well, we know that there's multiple prices. There's
right.
WTI and, but even WTI and Brent are paper prices, right? The price you pay in Karachi for a tanker of $2 million or 2 million barrels of light sweet crude or heavy, whatever the hell you need, depends exactly on that local market. And there's light, there's heavy, there's sour, there's sweet, and there's probably a lot of different varieties depending on your refining needs and what you're trying to do with it. So oil is far from a very complicated. People in the industry will tell you that. And I have a cursory knowledge. I do not have anywhere near a deep knowledge of the market. I just observe what's happening. And
You also do see just one thing, Thomas. So, like, as prices come up, you do see assets come online as well, though, right? Because this is one of the things. So I used to work in the Gulf, offshore, on a vessel that supplied the drill rigs as like my first job out of college. And one of the things that would happen down there is, as soon as oil, at that time at least, this is like 2013, 14 timeframe, if oil prices went below a certain dollar per barrel, I believe it was around 70 per barrel at that time, a lot of the assets in the Gulf, U.S. assets in the Gulf, would get furloughed until prices came back up. And then as soon as you hit about $80 a barrel, a lot of those assets would then come back online because now they're profitable. So while you do see demand destruction with price, you also do see supply creation, because you'll have a lot of places that don't normally profitably supply oil until a certain price come online. And I think you have seen some of that as well, alongside. Um,
yeah,
sorry, go ahead.
100%. But I say, and you can go look this up. The rig counts did not go up with the higher prices because the capital deployment is a multi-year deployment, and if people think that the
Right, but
prices
the
are
rig count
temporal.
wouldn't go up there, right? So this is what I'm saying. So they have capped wells that are already drilled in the Gulf. This is what they do. They'll have exploratory drill ships out there all the time, drilling and capping wells, and then they'll have all the assets ready. You have a singular rig that is pulling oil from some wells that are profitable and some that are not just stay capped. And as soon as oil hits a certain number, that rig that is still the only singular rig there that's pulling from multiple wellheads will then start to bring other wellheads online that were not profitable before but now are. And so that you see some of that just as a increase in barrel per day flow rate, not necessarily a rig count change.
So, and the last point, I'll let someone else talk here, but you seem to have some experience in the industry. When the straits were closed and the ships got trapped, and there was no output mechanism for places like Kuwait and Iraq, because they couldn't use the Saudi pipeline because that was maxed out. So uh, their storage capability or their storage capacity maxed out. They could put it on ships, they could put it in storage, but then they max out. They got to cap the wells,
What they actually ended
and
up
when you
doing in some of those circumstances is they can't even cap them because if they tried to, they'd lose the pressure and then you have to re-drill it. So they were, in some cases, I haven't been able to verify this, but I've heard it from people that I trust that in some cases they were just dumping it on the ground because you want to keep the wells pressurized and it's a bigger loss
yeah,
to lose the well. And if you don't have the storage capacity, it's literally the correct economic decision, tragically, is to just dump the oil on the ground, which is crazy. But
that's crazy. That's the first I
yeah.
heard of that, but it makes sense. But if you cap a mature well, uh, it doesn't come back 100% when you uncap it. That's just again. So this is sort of the longer term damage of
That also depends on the
what happened.
geology. Sorry, not to cut in, but just
Yeah, no, that's right. And so all I'm saying is I can come up with a lot of things that would say, there's some upward pressures uh, that are probably not in the narrative that are driving the price up. And I just think we should be prepared for um, to pay for this Iraq or this Iran war. We should be prepared to pay for it for the next 1 to 2 years in the form of nominally higher oil rates than what they would have otherwise been.
yeah, I don't
Wade,
disagree with that at all. I just think that the level to which the price increase will be sustained and the possible damage it will do has been overplayed by people that are trying to sell newspapers digitally, right? Because you always have people that catastrophize anything because they're looking for clicks. And I do think that's a thing that we all need to be cognizant of and weary of as participants in the X community, because that's what a lot of people do. Is as soon as anything begins to pop off, and you see it in the Bitcoin community all the time, oh my God, Bitcoin price is going to crash to 30K, and then it doesn't fucking happen. Or on the opposite end, we're going to 1 million next month. That's not happening either, right? And I think the same exact thing happens with these kind of conflicts, and the truth ends up being some sort of gray, muddy middle ground where it's hard to
So,
exactly say
Matt,
what's
so for the
going on in a lot of circumstances.
for the avoidance of doubt, I'm not selling anything, and I don't have anything to sell. I'm simply looking for what is the truth and what's likely to
Same.
happen. Uh, and so I have opinions, and those opinions are often wrong. But I share the rationale for the opinion simply so that people can evaluate or correct me or make their own conclusions based on the reasons that I have that opinion. And that's what these spaces are for. I mean, I don't have any illusions that I have a deep insight or a monopoly on the truth. I'm trying to seek the truth like everyone else is, and I try to share why I believe things are going to happen in a certain way. But that doesn't make it right. But at least I'm providing as best I can the rationale for it. I'm not just saying it's going to go up or it's going to go down, and almost like you're just picking the winner of a sports game.
Yeah, no, I
Thomas, are
agree
you in the
and
pool?
appreciate that. Anyways, I'll shut up. I've been hogging the
I,
mic.
I I'm in my pool office right now, so can you hear the
Yeah,
water?
it sounds like you're living your best life. Let's go back to Puncher.
Yeah.
Also, do you guys see Wade's
Go,
hand up?
yeah, Wade, go ahead, Wade. Sorry.
So we talk about how bad or not bad the war was, right? But the truth is that in the course of this war, since the start of February, we shot through 10 years, a full decade's worth of Raytheon Tomahawk production. That's not to include the interceptor missiles. So the bottom line is we were approaching SecDef required certification levels on both ammunition stocks, interceptor stocks, and SPR level. So I don't know which, what killed the patient, but what killed this war was one or a combination of factors. One, the SecDef required SPR, a minimum threshold floor. Two, the interceptor threshold floor, which is classified. And three, the Tomahawk, the Tomahawk cruise missile threshold floor. So those all basically trended towards zero. So I threw a post up there. You guys can look at it. But the bottom line is that the Tomahawk strikes, they had a lower high every single week on a trend line, and it matched like 1-to-1 with the SPR draw. So I don't know, which symptom killed the patient or if it was a combination, but I think the bottom line is when you're using nuclear capable strike assets, when you're burning flight hours up on, on B2s to hit, to use conventional weapons on a non-peer threat, that's not really a flex. I think we threw everything, including the kitchen sink, at them, and they said they were ready for more.
I do think it's interesting. You bring up a really good point as far as deployable missile assets, right? And you actually saw the same decline in strikes happen on their side. So I think it's actually fair to say that what you may have actually witnessed is effectively two two fighters gas themselves out, and then it's at the end, and you're just seeing kind of weak punches thrown in each direction. And it's funny because the number of missile launches coming out of Iran also followed almost that exact same decline.
Yeah, but we have a $1 trillion defense budget, and they have a $10 billion defense budget. So who took the L?
Yeah, well, and that's a whole different conversation around our cost plus contracting issues and all that stuff. So the ability to deploy a physical asset versus what it should cost are two vastly different things.
But the bottom line is here, guys. Since 1991, the combat power, the defense costs have inflated at 4% a year, and we're fielding half the force for double the cost since Gulf War One. Those are the facts. And even if we doubled Raytheon missile production for Tomahawks tomorrow, it would take us 5 years to get our stocks back to where we could do a similar strike package. So the U.S. is going to be sitting on the sidelines for at least 5 years here from a defense side. We're done. There's
You
no
know what they're
there's no way to recover those
you know
stockpiles.
what they're doing with some of the production side stuff right now to actually try to re-increase those stockpiles. I know this just because this is what I've been working on for like the last 6 months is doing manufacturing stuff in the U.S. or basically working on trying to start an additive manufacturing company. And that's one of the things they're doing right now is qualifying a bunch of additive manufacturers to try to replace some of those or replenish some of those depleted stockpiles, which I think is pretty interesting. But the capacity is not there yet, to your point. But I think you're going to see basically the way they're moving right now is to qualify a platform digitally, let's just say a part, right? And then you don't necessarily have to have it be made by Raytheon, but by anybody who's qualified to make that component. And then perhaps you have a Raytheon or approved person to actually um, build the Lego set, right? So I think that's interesting, but it's still going to take years to replenish the stockpiles is the bottom line. And I don't disagree with that at all.
Yeah, the Chinese are going to love it because all the subcomponents are coming out of their industrial base.
Not
So
not not all of
good
it.
time
So
to
there
invest.
is a lot of grant money floating around and a lot of capacity build out happening domestically as well. So I do think there's a lot of this that will actually lead to the addition of manufacturing capacity within the United States because that's what I've been working on and with. I don't disagree with you though that some of it will be made by China, but the intent and direction right now is to reshore that capacity, and there are massive efforts being done internally within the United States to make that happen. It's just the thing is, it takes years because you're talking physical infrastructure build out, right?
Agree with you on that. It's going to be a lot of money, trillions.
Yeah, and that's
Robert, how you doing, brother?
Hey, good morning, guys.
Maybe we can pivot off weapons and talk about Japan. What's going on in your mind, man? Rates up, currency down, a lot of cross currents. What are you seeing?
Yeah, I mean, I think they're probably going to intervene here. They didn't come out as hawkish. I was like, half asleep. It's my bedtime when they were doing the press conference. But from what I gathered, and what I can remember before I was falling asleep, they were pretty dovish. Now their equivalent of the chairman was in the hospital, and so there's also kind of an issue where this is. This is how crazy central banking and kind of like the modern system is. The old chairman, right? Just like Jerome Powell, like we know Jerome Powell, or the market knows Jerome Powell. They know how he talks. They know, the inflection word means is a dovish indication, and if he does this, then compared to his usual, right, like that is definitely noteworthy. There's all, with Japan, there's all that same kind of thing, but the chairman was not there able to give the press conference, so it just added to the amount of uncertainty. They really should be, I think, in my opinion, much more hawkish than they've been. If you look at inflation, if you look at the heat in the economy over there, it's been arguably going all the way back to 2021. It's been building, and this is coming out of a 25-year depression, basically 25-year recession at the very least, where they had deflation, they had negative wage growth, they had GDP that was basically flat to negative, on a long run average sort of view. So coming out of that in 2021, you start to get bond yields moving higher. I think that was fundamentally good. Right, they had negative nominal rates, and even and especially negative real rates at various different points in time. This encouraged a selling of the yen, right? You go borrow for negative cost, right? You're getting paid to borrow money in yen, and that's kind of a no-brainer. And that is the entire point of negative rates, is encouraging or trying to encourage people to go out, borrow money, right? Increase of debt, increase of credit, and then use that money, right? And that is kind of the entire point. The problem is what we got, for decades was the yen carry trade, where okay, I'm getting debased to hell holding the yen, right? I'm encouraged to borrow it. Okay, I can do that for free or even negative rates. But then this thing that I just borrowed is like a melting ice cube, So I can't go put it in bonds because those are getting negative nominal rates. So what do? Well, I sell the yen. And so this led to, an immense kind of multi-decade selling pressure on the yen, where they would then buy the dollar. And so, dollar yen appreciated, yen depreciated, and all those new dollars, right, that came from the yen borrowing, they get converted into dollars, then they buy U.S. Treasuries. So, the yen carry trade, I think, is kind of unwinding right now in a gradual way. But I think that, with the intervention we saw just a couple months ago, remember that they are monetizing gains. They were able to buy dollars at 50, and now they're selling them at 160. Right. So they are booking a gain every time they do an intervention. The problem is that by doing an intervention, they're selling U.S. Treasuries, lower bond price, higher yield. And not only that, but, kind of the dramatic yen strength that you get during an intervention, maybe that squeezes out some of that yen carry trade that I was describing. And, that can cause problems.
Yeah, agreed. Um, so you think they're going to intervene again? They spent $100 billion in the last 6 weeks. How much can they afford to spend? before the market kind of calls BS.
Yeah, they've got quite a bit of ammo. Now they don't have unlimited ammo, right? But they do have quite a bit of ammo. It would be the equivalent, right? If we put it into U.S. terms, it would be the equivalent. We have the Exchange Stabilization Fund, which is basically a slush fund for the U.S. Treasury Department. It would be the equivalent of if that ESF here in America earned $600 billion per year of net interest income. In other words, a third of our fiscal deficit would be covered by the income that our country's investments were making, right? All the various, going back to like post World War II, really, Japan ran a huge trade surplus, huge current account surplus. And so by definition, what that meant is that they were investors. They were providing huge amounts of outbound credit and buying, U.S. treasuries mainly. And those U.S. treasuries, not only are they long the dollar by buying a U.S. treasury, but they're also getting interest, right? If they bought some, 30-year treasuries 10 years ago, at 2% or 2.5% or whatever it was, they're going to get that interest for 30 years. And for them, it's in a hard currency. I mean, I know we, kind of would, laugh at thinking of the dollar as a hard currency, but compared to the yen, right? Just look at dollar yen exchange rate. The dollar is definitely a hard currency, right? It's an appreciating currency. So not only did they basically, buy and go long the dollar for these, past, I don't know, 5, 6, 7 decades, not only are they long the dollar and that is working for them, but the dollars that they bought, the interest-bearing dollars, U.S. treasuries that they bought, are earning interest, and that interest is quite notable. That's the so that would be a third of the fiscal deficit here in America. That interest income, but they also have the unrealized profit of everything that dollar yen has done, right? So if they bought dollars at 50 U.S. treasuries, interest-bearing dollars, not only are they getting the net interest income, but they also are sitting on a huge paper gain that they could theoretically monetize. Some people, Brad Setzer, who does kind of a lot of balance of payments work, he has been kind of proposing this and kind of, trying to like encourage them to do this. But of course, the problem being that to do that, you would have to sell U.S. treasuries and then sell the dollars that you get to buy the yen. So that, effectively being an intervention. I think that we're kind of right around the area where they intervene. I got some yen calls because, I think that given the domestic situation, given populist prime minister, given inflation and kind of the eco data, I just don't think that they're going to tolerate too much more yen depreciation. I think it's causing domestic issues, right? The financial engineering I described earlier is causing real issues for the Japanese people, right? Food inflation, energy inflation, huge. I forget the exact amount. It's like, I think 85, 90% on a caloric basis of their food is imported. Well, if you're importing all that food and the currency, the yen, the currency you control that you're paying, if that is depreciating, well, food inflation is going to go up, and sure enough, that's what's been happening. So, the people of Japan have kind of been suffering over the past couple of years with this yen carry trade. I mean, it's causing real issues for the people. And you have a populist prime minister, there's kind of the whole evil speculator kind of vibe that I pick up on. And this is common with emerging markets where, the currency is just getting hammered and they come out and they kind of make a boogeyman, right, out of the evil the evil overseas hedge fund speculators that are shorting our currency. We saw it with Argentina, actually. That was kind of a pretty pronounced theme that we saw during the whole Argentina debacle. So, I think that they're probably going to intervene. They have a lot of ammo to do so, not unlimited, and I'm not trying to say that it can go on infinitely, but they run their trade surplus has actually shrank quite a bit and they don't actually run that large of a trade surplus anymore. The main driver of their current account surplus, which is huge, I think 5.5% of GDP, is this interest income. The primary income that they're earning from overseas, basically from the investments that they made. I think in the unrealized gain on paper, at least, I think it works out to about 500 trillion yen, which is about 10x what their annual net interest income is. So kind of do the math there. It's quite a bit of money. And I think Bessent and the Trump administration wouldn't be too unhappy, to say the least, with a stronger yen and a weaker dollar. This is something that we're also seeing out of South Korea too. There was a couple wires that crossed, I think yesterday, talking about this kind of weak won, which is South Korean currency, and the effort, or coordination between America and South Korea to address that. So you got domestic Japanese interests that I think want a stronger yen, and then you got U.S. interest, which want a stronger yen. I think that they're probably going to intervene. That ammo, it's not unlimited, but it's pretty sufficient, at least for, I guess you could, the next year, 2, 3. It could go on quite a bit. Now, if all of that sounded like Greek, it's because this is how it is. This is what they constructed. This is our modern international, financial system. It's pretty crazy, but I think that what is starting to occur, the good news is what's starting to occur with de-dollarization is the kind of fundamental repricing of currencies back to the way that they used to be valued, which was on a fundamental basis, right? If you're a strong economy, if we go back, 400 years, you're the UK, you're running your very strong economy, you're running a very large trade surplus. Well, what that means functionally, right? Gold was money back then, 400 years ago. So what that means, if you're running a trade surplus, you are selling more goods to the rest of the world than you are buying from them. What that means fundamentally is gold is flowing into your country. Well, gold was money. And so what, imagine a liquidity surge from running a trade surplus and a current account surplus. Liquidity is your economy starts to heat up even more, right? And you sell even more goods to the rest of the world, meaning more gold is flowing into your country than flowing out. And eventually inflation obviously is going to become an issue. So what do you have to do? You have to, do the equivalent of raising interest rates. It's a bit different with the gold standard, but, raise interest rates to control inflation. Well, by doing that, you strengthen your currency, and eventually your currency gets so strong that you're not running a trade surplus. It doesn't make financial sense for the rest of the world to buy your stuff. And this is, kind of what we see with America, very overvalued currency. And then what happens? Well, you sell less stuff and you might start to run a trade deficit. Gold flows out of your country. Your economic growth cools off, and they got to cut rates, to spur growth, and voila, you kind of get this like balancing sort
Yeah,
of
but
equilibrium.
Robert, that's not what we're seeing, right? We're seeing that their rates are going up and their currency is going down.
Yeah,
That's
I'm talking like 50,
no,
like 20, 30, 40 years.
I understand, but let's look at where we are today, right? They can't get their currency up. They're having to intervene. In order to intervene, they got to sell something. They need dollars. So they're probably selling treasuries.
Oh, definitely. We know. Yeah.
Right. So like where does this all go? If the last intervention bought them 6 weeks and cost $100 billion,
Yeah.
right? Like I just don't see where are we heading with this, right? Like at some point they just spend away their $1 trillion in US treasuries, and now what?
Yeah. So at the peak in February, they had 1.41 trillion in foreign exchange reserves. They now have 1.31. So they've sold 100 billion just in the past couple months of mainly U.S. Treasuries. And they still got 1.3 trillion, quite a bit. Now, again, I think in the near term they do have ammunition, and they do have an alignment of foreign interest and domestic interest for stronger currency.
Well,
I
but
think
wait a
that
minute.
really what
Wait a minute. That entire picture continues to get weaker. Let's just play. Let's fast forward 6 months. They've had to intervene 3 more times, right? Where does that put them? Right.
Well, and there's an issue there, right? Which is, I think it's the IMF. It might be the World Bank. I think it's the IMF. They have a technical definition of what free floating, non-managed currency is. They have an actual definition for that, right? With like all the legal criteria. And so they can't intervene. I think it's more than 3 times in a year before they get labeled basically a currency manipulator. And of course, that has huge implications, kind of in global finance. So
But
like there's the added.
they're manipulating the other way, right? They
Well, it's
they have no
yeah,
choice, man. Like if they let their currency go, let's say we go to 200, right? Now they really have an inflation problem, which
yeah.
means
I don't think. Yeah,
which
I
means
don't think they.
higher rates, right? Like again. So let's just assume they can't intervene. Now what? I just
Well,
it
yeah.
seems like
I
a
mean
doom loop to me.
that 1.3 what I would watch, and what I do watch for kind of the oh shit, things are really kind of falling apart. What I watch for that with Japan is the spread between their 30-year JGB and their 2-year or their 10-year. That spread, when it starts to really blow out, which it has, right? Like a couple times, if you go back in 2025, it kind of blew out. There was another moment recently in early May, late April, where that started to kind of blow out and go vertical. That's, I think, where you might kind of get the indication that things are kind of starting to unravel. But I mean, they got ammunition to intervene. Now, I think that fundamentally, what they need to do and what they could do to kind of arrest the doom loop, because it definitely is a doom loop, right? If you play it out over a long enough time period, I most certainly agree that it can be a doom loop over a decade or maybe 5 years, right? But over the short term, what they need to do is just hike their be more hawkish with their interest rate policy, because half of their debt is owned by the Bank of Japan. So that increase of interest expense, it's mainly an issue if you have a high external debt to GDP. But Japan doesn't. They have very high nominal gross debt to GDP, but half of it's owned by the Bank of Japan. And so all that extra interest just gets recycled back to the Ministry of Finance as income.
Well, we'll see how it plays
So if they
out.
hike, right, like if they hike to just kind of extremes and inform the means, if they hike to where we are at 4.3, call it, that interest rate differential goes to zero, and that yen carry trade is done. And I think that a lot of the pressure on their currency, I would say the majority of it, with the oil shock, yeah, that's definitely going to cause terms of trade shock, and that's going to cause weaker currency for sure. But with that kind of maybe in the rear view mirror, the real thing that is driving the issue for them is the fact that they have a 1% interest rate, when the rest of the world is at 4. Or you look at Europe, I mean, they're hiking. So I think that's really the issue. And if they got a little bit more hawkish with their interest rate, I think that would help to arrest a lot of the currency pressure. Obviously, you can't have oil doing what it's been doing. That's going to cause terms of trade shock and weaker currency. But if they came out and just we're gonna Paul Volcker, right, and we're just gonna hike and hike and hike until inflation is beaten, that would solve the issue for them. Now, it would create higher interest expense, but again, with half the debt owned by Bank of Japan, that just kind of gets recycled to the Ministry of Finance.
Fred, how you doing, sir?
Doing good. Doing. You know what I'm looking at right today is this STRC is pretty. It is not repegging. I don't know if you guys have already talked about it, but the sailors' interest rates right now are looking. I was looking at this STRD thing, and it's 15%. Right now. So I don't know what everybody thinks about the sustainability of this trend here, but I wonder. I wonder how high you go in terms of these rates.
Well, I've been pretty outspoken on this subject. I just don't get it. I mean, to me, they're just high yield debt, right? And the whole concept of pegging them, I guess high yield debt is volatile, and it'll, it's trading where the market says it's trading. So now you got what, $15 billion trapped in this shit, in high yield debt that was sold to them as being some type of money market, which it's not. And yeah, I think
I think
strategy.
it's even more. It's not even just sold as a type of money market. It's sold, some sailor that are really reminding me of Juan. He's calling it digital now, right? He's saying this is new for me. It's digital money, and I went back and I pulled some statements from Do Kwon. It sounds very similar. You know what I mean? You know, this is new digital money backed by Bitcoin.
They're even
Hey,
calling it credit, Fred.
Hey, Fred,
He's calling
Fred,
it credit.
Fred, you're rubber banding. Drop down. I'll bring you back
You
up.
sound like Stephen Hawking, Fred. Yeah, come back.
Hey, Terrence, you got to bring up a new host, maybe Thomas or somebody, because I got to hop on a call.
All right, you got it.
Fred, drop down. We'll bring you back up.
On just quick on Fred's point, he's been going out there calling it digital credit. It is not credit. It is in no way a credit instrument, and I'm kind of shocked that he said it as much as he did, because I think that opens him up to a huge liability for a potential lawsuit.
You should. I don't know if you guys saw his Prague keynote, but I think he knows he's getting this kind of criticism. He did this hour-long talk, and a large portion of it is him sort of redefining the difference between credit, equity, money, debt, and he does it based on, look, Bitcoin is money, everything else is credit. He's like taking Rothbard's, quote. Um, and then he's saying, well, in the fiat world, we sometimes use credit and equity and money differently than we do in the Bitcoin world. And he has a whole matrix and lots of charts. I found it actually more confusing after watching that portion of it. But
I did too. It really, Terrence. It sort of feels like to me, when he's sort of saying the money that I'm issuing, STRC, is the new definition of digital money. I find that a little disturbing. You know what I mean? It's sort of like, okay, so my money and Strive's money is this new kind of digital money, which is high yielding. Okay, that's the new money that we're dealing with. I don't know. Like, I thought we were sort of Bitcoiners here. You know what I mean? Like, before it was MSTR is this entity that's issuing debt, that's doing convertible bonds, that's raising money at zero. Now we're into this high yielding thing, which reminds me, if you guys remember, where Anchor Protocol was in 2022, right? Which was yielding 20%. Like, hey, it's 20%, but it's backed by Bitcoin and Terra. I don't know. I'm not gonna. I don't want to sound like Chicken Little, but I don't like the direction of this at all.
Well, you had me at hello. Um, yeah, I've been screaming about this since it was pegged at 100, and I said this is a stock. It's not a credit instrument. It's not. Look, the whole thing is just kind of ludicrous. And maybe he gets bailed out. Maybe he doesn't. Maybe the best scenario is strategy trades at a discount, and this shit trades at a discount, and he just goes away for a year or two, while Bitcoin rallies.
Well, also like it just let's look at the valuation stuff right now. If you think about it, Parker Lewis had some pretty interesting formulas on. He's sort of like on one hand you have Bitcoin, which at the time was 67,000, because one Bitcoin 67,000, or you can buy one Bitcoin plus a whole bunch of other bad stuff for 127,000. I think the equation was wrong, but here's the crazy thing right now. Like if you sort of say, okay, what is one Bitcoin with a bunch of debt that you don't have to pay worth? Well, I would argue it's worth less than one Bitcoin. It's worth less than 67,000, right? Because now, as it turns out, with the Strive thing now, actually, it's worth more than 67,000, right? So it's sort of like you've got Bitcoin, you've got the amount of Bitcoin that they have, but even in terms of just the raw ratio of the amount of Bitcoin they have, it is now worth more than the amount of Bitcoin they have. Does not make a lot of sense to me right now. I'm just saying, to me, we're getting into very, very, I don't know, very non-Bitcoin kind of terms here when we're talking about these things. I don't know.
No,
It's starting to work for me.
look, you're right. You're right. And we'll just see how it plays out, man. It's dangerous times. He's put Bitcoin in a little bit of danger. I wouldn't say a lot of danger yet, but a little bit of danger. And he can get bailed.
Well, and he can look. He can back off. He does not have to be issuing all this debt, right? So right now we have $10 billion of this STRC, right? That's trying to reprice, and it's getting a higher and higher and higher coupon, right? Like right now, STRC is trading at an effective yield of 12.5%. So I wonder, when June 30th, now they said, well, we're gonna reprice it every 2 weeks. Okay, great. So what's this next June 30th repricing going to be? 12%? Well, that may not do it, right? It may have to go to 12.5%, right? So now it's going to be buy stretch, get 12.5%. Well, I was looking at STRD, right, which is gives you a fixed rate, which can't actually it it won't actually go down, right? Unlike STRC, which can actually go down. STRD is trading at 15%. Like, okay, that's getting really high up there. You know, if you think that he's going to make the payments, you should just buy STRD, because if you can get money every month at 15%, well, that's pretty good. But I wonder, does this thing go all the way to 20%? Does STR? What do you think, Dart? Do you think we get to these kind of insane rates? And if so, does that start to break the the ability to raise more capital?
Yeah, I'll tell you this. As much as we don't know, he definitely doesn't know what to do. Um, Look, STRD is trading at 66.75. So I'm not sure where you're getting the 15% number.
The yield,
Yeah,
STRD, the
right. But
effective yield,
the
right?
effective
Right.
yield, if I buy it at 66, don't I, it goes to par. I mean,
No, 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 but it has a coupon, right? So
yeah.
the sort of the current yield of STRD is fifteen
Oh, I see
percent.
what
They
you're
they
saying.
show
Yeah.
it.
Versus the
You see?
coupon. Right. Yes, I understand.
Yeah. Yep. Yeah.
Okay. Yeah. I get,
So you buy it right now, you're getting a 15% yield, right?
yeah.
And that yield is not, that coupon is fixed. It's not going down, unlike STRC, right?
Yeah. Except
So
that the STRD is like considered the jump. What's interesting is the spread
no, but
between,
it's the same preferences, I think, right? The same,
well,
I think that,
look at STRF versus STRD. So that
well,
STRF,
STRC cumulative, they have cumulative
right. So,
so if they miss one, they have to catch it up, right?
right. So the STRF, which is more of a kind of a debt instrument, more like a debt instrument, is trading, with a very significant premium. And even more scary is that STRF is senior in the structure, right? So STRF arguably in a dissolution gets its Bitcoin back, gets paid, whereas STRD does not. So that's what's really interesting. It's almost like they're trading as if this thing's going to go into receivership.
Well,
When does the
both
reverse split
STRD
happen?
and STRC, right?
Yeah,
Both of them are trading like it's going.
to
There's
break.
a non-zero chance of this thing going into receivership.
Correct.
When does the reverse split happen? Because I think you might do that to defend the price of STRC, don't you?
Reverse split of what?
It's not a reverse split. What they're doing is they're just saying we're going to reset the coupon every 2 weeks instead of every month, right? So right before this, it was every 15th of the month that they reset. And the date of record was on the 30th. Now they're doing it every 15 days.
No, but do
So,
you to bring STRC back up to the peg, they would
well, then
consider.
they're going to reset the dividend. They're going to have to reset it up to maybe 12 and a half, right?
No, I understand that, but I don't think there's anything in the text that says they can't reverse split and basically bring the shares value up by merging them. Don't you, isn't that possible?
No,
Doesn't have to
I don't think so. I do not think that they can't just say, I'm sorry, we're giving you a 2 for 1 and or whatever. No, that I don't think that that's possible.
MSTY
Fred,
did it.
does a move to 100,000 on Bitcoin uh, solve all these problems for MSTR?
Maybe.
It solves a lot of them. It
Maybe
really does because look, the debt becomes a much smaller portion
the capital.
uh, of the capital, right? So right now their amplification, they're sort of what they call amplification, which is 40. It's basically total debt divided by equity. It's like 40%, right? So at 20%, it's not that big of a deal. In fact, you could argue, wow, they're paying a 15% dividend on STRD at 20% amplification. Great. I mean, the problem I think is that as the amplification goes down, the appetite of Saylor to throw on more debt increases, right? So if he just didn't have this, just absolute, appetite for more debt, I think we'd all be saying, okay, great. But it seems like, the I'll be adding at the top Laura is really true. He may he may be actually adding at the top massive amounts of debt and getting himself into a problem. That's kind of my biggest problem with Saylor is that he has just he's like Elon Musk. He has this infinite appetite for stuff, and I just don't. He's not content.
So he has a long-term conviction that the Kager on Bitcoin, the underlying asset that makes his stock, is going to far outstrip the APR of any coupon, whether it be 11.5 or 15. Um, that's his view. Now the issue is, while it's not the Kager is not performing, how does he run the risk of getting too cute by half?
Yeah, how
That's why
does
I
he
was.
do if we go into a recession for call it 18 months and Bitcoin is has a negative CAGR for 2 years, 3 years, 4 years even.
I wish there was a better and more simple way to save.
Yeah.
You mean a different kind of digital money, Terrence? I don't know. I'm not sure there is one.
Yeah. Hey, Arbin, did you want to chime in? I saw your hand up for a while.
I was just gonna say that in a conversation with CJ, who runs Stretch and Fong, that Fong mentioned that they could go up to like low 20s, mid 20s, but I don't know how they think that's going to be a viable move in terms of dividend payout.
You mean for STRC?
Yeah.
Or- and what was did they add any color or did they just make that assertion?
Well, the color was my one of the guys I work with. He asked them how many sell limit orders there were and where they were, and like what the size was on those, and was talking about some like coordinated Jane Street attack, about how STRC and these products are still too small in the grand scheme of things and could be taken out in a targeted attack. And the whole conversation was like, well, at what point does STRC become bulletproof? And I think we came down to like 300 or 400 billion of underlying Bitcoin, in order for this thing to not be able to be attacked. But yeah, I don't know. We're just talking about what is the mechanism really to peg it, because this is not I mean, like everything you guys have been saying, this is not a redeemable credit instrument. So there's what is really pegging it, right? It's like it could genuinely be a rugged instrument. Like it could be a depressed targeted instrument. So I wish I had my buddy here right now. He'd give a lot more color to this. He's a lot sharper on this topic. He actually piqued their interest for quite a bit.
Did you guys see that today? SETA, I think it hit 103. Um, it was well over, and I don't know if it's because the daily dividends just started, um, or what, but it seems to be doing almost the opposite of stretch. And with a higher yield, I would think for people that do like this product, wouldn't they be shift? Why wouldn't they shift over there? And there's no debt. Strive has no debt, I don't think.
I think it's a way better product. The daily like the daily payout fixes the volatility. It kind of counters the why this is pegged. Because like, why would an instrument that does practically nothing for you except exposes you to credit risk from Sailor for 29 days of the month? Why would it peg to a dollar value? I mean, other than trying to chase down the dividend, which is going to flood in to the payout days. So, and the speed of the market, the speed of the money, a daily is pretty much fast enough. So I really like Seda.
Was that you, Shadalay?
No, it wasn't me. I was just had to come in because it sounds like you guys are hating on Sailor again, who is just
No, we
putting
don't hate
massive.
Sailor. I think most of us love Sailor. We're just questioning one of his fiat products, just to be
Well, I
clear.
think you guys can question him, but like, let's be honest. Without Sailor, like, we'd be at fucking $10,000 Bitcoin. Maybe we'd be lucky, right? But like, Sailor has made the infrastructure change its rules, the accounting rules, to allow Bitcoin on balance sheets. It put, Elon has Tesla and SpaceX now have Bitcoin on their balance sheet. Like, Sailor is implementing a military strategy with a long-term goal that we don't necessarily know what's going to happen. So I think when you look at it from that angle and you look at the major pillars that has been moved, you got to realize that Sailor is a good guy implementing a plan, a long-term strategy, probably with the assistance of the military. By to be honest, um, in this very calculated, methodical move to onboard the world to Bitcoin. Right? Like, we're never going to get to the place we want to be without the institutional investors, without Wall Street getting on board and all these different products. And so the derivatives, right, are the entry to get access to all that other market cap, and that's going to come because the plan is brilliant, and you can see it unfolding in real time. And the tokenization is just the next level, right? Tokenization, I know me and Dark kind of argue about this, but I think the DTCC is the ultimate enemy in this thing, right? People will be able to tokenize equities without the SEC approval. People can IPO companies from anywhere around the world, and we'll have access to free and fair capital markets for once. That's the next move, and that's where this is going. So I'm excited, and I'm just going to throw back some shade at anybody hating on Sailor. So.
Yeah, so I mean, all of that stuff is coming, and I don't think anyone here is hating on Sailor. He definitely has done a lot for the space. And he's helped onboard and educate a lot of people. I think he does a lot of good. We're just highlighting the difference, as he does as well. To your point, G Money, the difference between Bitcoin and all of these other various products. But I also don't know that we could say things like, "Oh, if it wasn't for him, we'd be at a certain price." It's like so many people got wiped out by public treasury companies and whatnot, that if they had just invested in Bitcoin, I think we equally, we have to see where we went even before that. But yeah, the institutions are coming, the banks are coming. I do believe that Bitcoin is for everyone, and this is what adoption looks like. So as long as we can all access it and self custody it, it's good for everybody.
The criticism of Saylor is not the good he's done. It's the changing, shifting narrative and the redefining of terms
Yeah, it's trying to call something digital money when Bitcoin is the money.
and the lying about retconning his previous statements. I mean, no one cares that he sold 32 Bitcoin. No one cares about that. We care that he's changing his principles. and pumping fiat schemes like tokenization on Ethereum. This is not Bitcoin.
This is part of a military strategy, right? This is part of the information war. This is part of how you rug pull, certain institutions, certain players, and continue, to implement the strategy, right? Like you have to be adaptive. You have to, be able to maneuver in certain areas, and that's what he's doing. Like I think part of Sailor is obviously, a psyop, right? Like. He told everybody to go long multiple times and it's crashed 50% multiple times. And so, what is that? Well, he knows, what it's going to do in some regard, but I think that's part of his play. Like he's an actor, right? Just like Trump. These are all kind of actors in this play for the Great Awakening. And so, I don't think you can take Sailor at his word on everything, just like you can't take Trump on his word for everything. So,
G Money, do you have two big framed posters over your bed, one of Trump and one of Sailor? That's kind of what I picture over at your place.
no, but I have dedicated some Bitcoin specific NFTs to those guys that I think are going to be cool in the future. That kind of, basically outline my theory on chain. So no, I mean, I think I think we just got to like be a little bit more, like open minded and not so like maximalist. Like I get the maxi, right? Like, but also like, there's certain things that have to be done that aren't in line with that are going to happen, and you can either like complain about it and get emotional about it or just be like roll with the punches, right? And be like, okay, this is what adoption looks like you kind of talked about, um and just kind of embrace it that you can't co-opt the network. Just because Bitcoin or just because Sailor's getting 1 million Bitcoins doesn't make him, give him any extra special powers over the network and all these other things. Like just go with it, man. We're winning. Like what, stop complaining that we're winning, please.
It just
Yeah, I
sounds
don't
like a
think
lot.
we're complaining about that or stating that.
It just sounds like a lot of words to say that it's good to lie to people when it serves your interests or when things aren't going to plan, and that there's a master plan behind the scenes every time there's a lie. So, I mean, I have no faith in this.
All right, guys, I don't know where you want to take it. I see there's a new speaker here, David. I do have to jump a little bit early. If we can go around the horn after this, I just have a dental appointment. So apologies. David.
Thank you so much, Terrence, for having me up. Long time listener, big time lurker. Don't I normally prefer to listen to the experts, but I do have some questions as the lay broke person in trying to stack satoshis that I feel like you guys could help answer. I see guys like Eric Rice as a listener. I'm a huge fan of his. Maybe he could help answer if you bring him up, or State. I'm a huge fan of his as a sort of contrarian viewpoint. Love the space. Here's my question. Um, I know that there's this sort of libertarian ethos that drives a lot of Bitcoin adoption, where you guys don't care what the about number go up because it's sort of a get around the bank's regulatory capture thing. I love that, by the way. Still, I need number to go up. I need ROI, and I need yield in the meantime if I'm never allowed to sell my Bitcoin. So to me, there doesn't seem to be options for yield that don't cut against self custody, which is a major Bitcoin ethos. How do I, as a non expert, not a millionaire, realize some gains so I can pay some bills, but still steward my Bitcoin well? And I just don't see these things as compatible yet. And maybe some of the experts can speak to that, especially Eric, if you have him up. A huge fan of his. Thanks, guys.
Thanks, David. Yeah, and we'll bring Eric up if he's available. He just hasn't been available, but I'll see if he is able. He'll do a request and can answer. I can answer just from my perspective, the way I see it, and I think there's a gamut, and people are on both sides of this depending on how deep you are convicted in Bitcoin as becoming your money. It is a monetary system and an asset, and for someone like me, it is my money. So with the dollar, how do you earn yield on your dollar, David? There is no yield on your dollar, right? you you make your dollars, you fiat mine, and so hopefully with your fiat mining you can pay your bills and do what you need to, and what you have left over you want to save. You just have been unable to because you're completely debased and diluted and devalued in government obedience tokens. So once you get rid of your government obedience tokens and move over to Bitcoin, that helps over the long term solve that problem. And so you mostly do want to just save in it. But once it becomes your money, which it did for me, I now just spend my Bitcoin. I live off of my Bitcoin. But the gamut that I was talking about is some people are going to borrow off of their Bitcoin, just as people borrow off of their real estate. The ultra wealthy borrow off of their assets. They have portfolio loans and whatnot, and more of these products are coming around. And you're right, there's risk in that. And some of that means you're going to have some sort of collaborative custodial or just some other fiat custody arrangement for them to give you those dollars for your Bitcoin to be quote unquote safe. And other and in other ways, you really should just be concentrating on what you find purposeful in the fiat world, where you can earn your dollars and spend those, for your immediate bills, and then just save the rest in Bitcoin. So there is no yield on any money. The yield comes from taking risk, which is why there's yield. An interest rate is just, the price of time and between you and the creditor or the borrower. So you can't earn yield on Bitcoin because it is scarce and it is a system. If you want to earn yield, you are going to have to interact with some kind of fiat product, and there's always going to be some risk, but you also don't have, it's not binary. You don't have to do it with all of it. So this is why people like Saylor, to his credit, are coming up with these things. For him, he does view this as a portal for the capitalist world to port in and to start dipping their toes. And obviously, some of us fundamentalists don't think that that's the best way because they get distracted from simply saving in Bitcoin. But yeah, even very, very many hardcore Bitcoiners are like, well, that's all great, but I do want some yield here and there. For me, I'd rather, appreciate, on average, which we've been doing 40 to 60% over the long run, than have, a 9, 10, 11, 12% yield. Um, and I'd rather borrow off of small percentages of my Bitcoin that allow me to sleep at night, where I can let that appreciate faster than what I'm spending. So there's no right answer. It's really what you're comfortable with and what you're doing and where you are in your life, whether you're retiring or you're still building your career. I mean, if you're still building your career, you kind of want to be concentrating on how you're mining fiat in the first place. But anyways, I'm
Thank,
I'm doing a lot of
thank
talking, and
Thank you so much, Terrence. I appreciate the answer. I do believe, like you said, it's a difference between wealth preservation and wealth creation. A lot of you guys have made your money and you're in the wealth preservation stage. So you're diversifying. And like you said, some small percentage, you don't have to self custody and you're fine for it to be sort of have that counterparty risk while you earn yield on it. But for most of us, and I believe this is a Federal Reserve statistic, we're all paycheck to paycheck still. We can't afford to diversify. We are all in on one underlying asset to earn some yield for us so we don't have to sell it and miss out on ROI. And I think I'm probably more representative of most people that listen to these spaces who, if we self custody 90% of it and try to earn yield on some wrapped 10% of it, we're never going to escape the wage trap. We're going to be wage slaves forever.
David,
Yes, sir.
I'm 100% with you. I never speak in these. I love this space. I love Bitcoin. I'm a paycheck to paycheck guy, just like yourself.
Thank you.
When you're sitting in a 60 vol asset, 60, 70 vol asset, and you can't stand those drops, right? I'm in the same position. I've been in Bitcoin for years, but I finally got to the point where I'm like, I gotta pay my bills. I gotta figure out something else. Now, this isn't for everybody, of course, and just like Terrence said, it's a kind of the fiat minded, but BlackRock just rolled it out. I think today is an income fund, but prior to I think they came out about a year and a half ago is Neos income funds. And so about 3 months ago, I switched everything into BTCI. Now, at the height when Bitcoin was topping out last year, it was paying out about 40% dividends. Now it's about 25 to 30%. But all they're doing is writing covered calls on the underlying asset. You're not going to get the gains. You're not going to get you're going their goal is to get about 60 to 70% of the upside. But what you're going to get is that yield, that dividend payout every month. And it's been consistent. So if that's something that you're interested in doing, it's worked amazing for me. So and I'm just the regular guy that's just with 4 kids trying to make a living and but not sell my Bitcoin. And I was like, if I'm going to take a 50% hit, why not at least get paid to do it? And so that was kind of my thought process. And what other asset are you going to can you be in where you're going to get the minimum it's been is 25% a month.
Just be
And
careful with
again,
those
Hey guys,
products
I'll
too.
just
Like everyone was on here talking daily about Misty when Misty first came out, and we had some hardcore Bitcoiners selling their Bitcoin, buying Misty, and say, "I'm
yeah,
now retiring forever." And a lot of those
yeah.
people got, maybe it'll come back, but they got completely wrecked. And so if you're looking for a fiat product, you don't even have to be looking at Bitcoin. Then there's all kinds of things that do this. Bitcoin is not the first, asset or
But I don't
category.
want to sell. But Terrence, I'm with you. I don't want to sell my Bitcoin. Like I still look at
I
it
don't,
like
and I don't
I'm
think you
still.
should sell your Bitcoin. I think if
I
you
don't.
guys are
Yeah.
paycheck to paycheck, I would concentrate on what you're doing in the fiat world. You do live in meat space, and that's a whole nother subject. But there's ways to just sort of optimize and improve what it is that you do, how you're solving problems for people, how you're gaining customers. That's a whole separate subject that is one that I used to
No, I
talk a
totally
lot
get it.
about
I
before
totally get
Bitcoin.
it.
Yeah.
I just think about I
but,
got to
but
beat inflation. Like I'm
No,
gonna
I
find a
know,
way
but
to beat
maybe you're putting
inflation.
too much into Bitcoin then. Do you know what I'm saying?
No, that's true too. That's true
Yeah,
too.
because I think
But
a
what
lot of
I
people are throwing it in and just think,
but here's the other thing. You can borrow against it, right? So I still borrow against it. I know I'm Dave Ramsey's worst nightmare, but I'm with like I get it. I get it. I just think for the average Joe who's like, and I'm 50 years old. I'm like I'm not I still look at it the same way. Like instead of looking at it as I'm stacking Bitcoin, I'm stacking every time I'm buying BTCI, I'm buying another, I'm buying a raise every single day. Like if I put 25 bucks in it a day, 30 bucks in a day, I'm like, okay, that's $3 more. I just got a raise every day. I'm getting like a three. And now I know, I mean, it's been a year and a half. It's
yeah,
been
but the
out. But these
share
income
price
funds,
can wipe
but
that out.
but no, no, that's true. But it's just no. You have to look at it like this. When Bitcoin took a 50% hit, I know I'm going to take a 50% hit. The thing is they're writing options downside and upside. So you're not taking as big of a hit when Bitcoin drops, but you're not going to get the upside either. You're going to get 60 to 70%. That's their goal, and they've hit it every month. I mean, but
I think one thing people need to realize too, and David, I noticed you have an XRP banner in your profile pic,
Yes,
so I'm not
I
sure what
know.
that's about.
Listen.
I, okay.
I'm not. I'm a learner here. I didn't come here to.
Okay. Okay. So let me just give you this. Like a lot of us, some of us have been in here 10 plus years, right? Myself included. And a lot of us were fortunate enough, right? Lucky enough to see through the bullshit and realize Bitcoin is the best asset ever given to humanity. And so what you kind of have to do is you kind of got to zoom out, right? And you got to realize it's not a get rich quick scheme, but it's a guaranteed bulletproof way to exit your wage system of theft, right? Through exploitation and all these other things. And so you have to just stay true to the course, stack sats as much as you can, focus on your fiat mining, right? And eventually, like you'll get to a spot where you'll realize it. And so it's joining a game where you know you're going to win in the end, right? That's the thing. But you have to just be, brutally, consistent. And you have to not fall for the gimmicks. You have to get rid of the XRP and all the other bullshit. And you just have to stay consistent. And that's unfortunately what it's going to take for you to get there. But that's kind of the best advice I can give you is just stick with it. Keep your head to the ground. Don't worry about the yield stuff as much. I would focus on the fiat mining more importantly, and then just stack as much
In
Bitcoin
an
as you
odd
can.
turn of events, G Money just gave us great advice. Now,
I appreciate it, and I've been listening to G Money for a while as a lurker, and I feel privileged to not have my head bit off for owning
oh, you
XRP.
are lucky. Yeah, yeah.
Listen,
You are lucky.
listen, guys. I'm
He's in
very
a
well
good mood
aware.
today, David.
I'm very well aware how hostile you guys are towards XRP holders, and I just want to reassure you guys I'm not your average riddler. I wrote a whole book on why I think that
Oh no.
to hedge your Bitcoin, some sort of play
Oh
on
no, you're going to dig
whether
yourself in a hole.
you know what. Here's what I'm gonna do.
You might want to stop while you're ahead, David.
I'm gonna not dig myself in a hole
Okay.
because I don't want to offend any people with a religious conviction on Bitcoin. But I just want to say that what I appreciate is that Terrence at least is one of the people here who does not make this an echo chamber. I've heard people like State and other people present their case and it be respected in general. And I just thought that this was sort of a safe place to ask questions. I didn't bring up XRP. He did. I didn't come here to shill anything. I just came here to learn because, if anything, if I'm to be diversified in something like Bitcoin or XRP or others, the same way the U.S. government is, that this should be an okay place to ask questions. I'm not here
Yeah.
to tell you guys what to
David,
do.
you should
I
stop
would add,
talking. Remember, diversification means less Bitcoin. Go ahead, Thomas.
I would add this. A lot of people want yield, and I hear that, but there's no Bitcoin in its purest form doesn't have the attribute of yield. So if you want to use Bitcoin and get yield, you must trade attributes, the core attributes of Bitcoin in order to get yield, because it's a trade. There's no free lunch. And the one attribute you almost certainly lose in every case is the sovereignty aspect. So if you want yield, you're gonna have to give up some level of sovereignty and introduce third party counterparty risk. That's an individual choice if you're going to go do that. Some people don't care about the sovereignty, whatever. That's go do your own research. But yield, there is no yield on Bitcoin without trading some of the attributes, and you just need to know exactly what you're doing there and why you're doing it. And that includes the borrowing mechanisms, because you have to post it as collateral. So everything has a cost. There's no free lunch. Just do your homework and be smart about it, and just understand a lot of these income funds, whether it be Misty, whether it be the new BlackRock thing, the ones that are trying to generate yield off these products, they are decaying assets. Terrence mentioned these guys got wiped out in Misty. They lost a lot of money, and I just looked up the BTCI. It's down. It's lost a lot of its core value. Well, as someone's throwing off a nice dividend, the basis is dropping 30, 40, 50%, and it's offsetting it. So, again, do your homework, be smart about it, but understand in the purest form, Bitcoin doesn't have a yield. And if you're trying to get it, you're going to give up some attributes.
Thank you, Thomas.
Hey, Anon and Robert, want you guys say your goodbyes, and I've just got to jump here. Apologies.
Yeah, I would just reiterate, it's someone that was in the train of MSTY, and I didn't get wrecked, but I got basically brought back to zero. So the whole thing was just a waste of time. I would recommend against these types of products.
Thank you.
Hey, Tara.
Robert jumped. Okay, Chuck. Yeah, you're the last one up
Yay.
here.
Hi, everybody. Long time no talk. Hope everyone's doing well. I just wanted to pose a quick question. And again, I've kind of been out of the loop a little bit. Is there an FOMC decision tomorrow, whether or not to raise, keep the same, or lower the rates?
I don't know. I would punch that into AI maybe.
Does Robert or Thomas
No.
know that? I think tomorrow is a decision day, announcement day.
Okay.
And the reason I ask is what happens to STRC if the Fed, Warsh, Trump's new guy, his first opportunity, lowers the federal funds rate 25 or even 50 basis points tomorrow and surprises the world? What happens to STRC, the demand at 11.5%, when the Fed funds rate drops by 25 or maybe even 50 basis points? Do you think that gap from where it's trading today to par immediately closes?
Marilyn, did you jump up here to answer that?
Yeah. Chuck, can you ask the question one more time? Sorry, somebody was talking to me.
Yeah.
Yeah.
What
So
happens? What happens if Warsh cuts rates 25 or 50 basis points? What happens to STRC's ability to get back to par?
I'm not sure what it does from the ability for it to get back to par because STRC has a perception issue right now.
I'm just wondering about the demand. The gap between what
Yeah, I mean,
the rates are.
if if Saylor, because from a TradFi perspective, Saylor ultimately could start decreasing rates, right? again, my theory is that he would increase the rate for incentive realignment purposes. But right now, I think there's a huge perception issue going on. But going back to the Fed, what I think they're looking for, I think they're meeting. It's either tomorrow and then maybe a decision on Thursday, or they're meeting today and a decision tomorrow. I'm not sure, but it's not. Nobody's really expecting them to drop rates. That would be amazing if they did. It would really show that the Fed's not independent and that they're basically political, like, captured at this point. I think what the market's really looking forward to is whether Walsh comes out and he's dovish in his comments. And I think that's ultimately going to be the tell, right, for where we're going for the rest of the year. I think it's too early to say how STRC is going to react, just because I think, again, it's a perception issue with how the mechanism works. And really, STRC is going to take a little bit more time. The collateral has to recover, which is ultimately Bitcoin. So,
Thanks,
All right.
Marilyn.
Thanks, guys. Just thought that there might be some kind of unperceived consequence as a result of a surprise rate cut. That's all.
Thanks, Chuck. Yeah, I agree with Marilyn. I do not think we're going to get a cut at all. Maybe even the opposite. But I've got to jump, guys. Thank you. We'll see you all tomorrow. And thanks, Thomas and Anon, for co-hosting. Many thanks.